And let the fun begin. May 22nd, 2019. It's a Wednesday, guys. 13 market moves daily. Here's some key observations. First one, I've got this purple one, which should be good news for everybody that shorted AVGO yesterday. Apple is actually resuming a sell-off today pre-market on pretty substantial volume. So as it tried to bounce, it completely surrenders all the gains from yesterday pre-market, which indicates further drop in any chip manufacturers or semiconductor stocks. So for those of you that stay tough and added to the positions fearlessly on AVGO, congratulations, guys. It's going to be a nice profitable day for all of you. Now, from May 21st, 2019, observation number one, market actually manages to escape the deadly 11-11-6 sequence that we were calculating to take place. Instead, we end up pulling off this bullish 7, and more on that in detail in a minute. Now, we did touch the 2870 level as indicated in yesterday's video, and we did it 3 times. Oftentimes, the more times the market tries to break for a certain level, the less of the probability that they're actually going to do so. So, however, as far as yesterday concerned, we were able to hold this level of 2860, which was significant. Pre-market, we are indicating that there are early signs we may actually not hold that level of 2860 at the point I'm recording this video. The market is trading at 2862. Double bottom on the VIX around 14.8. So this morning pre-market at 5:30, the VIX is hitting 14.67. And we're actually expecting a quick rebound from there. What we don't want to see, we don't want to have VIX always stays welcome in this 14 handle. So ideally, we want it to dip there, revisit that low, and bounce out of it, bounce out of 15.16, so we can make a ton of money on these puts. Now, watch out for a break or hold of the 28.52 level today. That's going to be the key observation for today, guys. If broken by 10:15 a.m., embrace the further drop in the markets to a level of 28.26, 28.36, right around here. And definitely add some puts. Now, quick trades for today. Lows, Qualcomm, and pretty much we're trading all the usual suspects, really managing the execution on some of the semiconductor and technology stocks, like Amazon and so on. So here's the deal. We've talked about, for the next 7 days, possible drop in the market. So if we see a follow-through on the sell side throughout the trading session, if we don't get a reversal bullish move like a 4 by the end of the day, that would be a good indication. High volume, no move forward by the end of the day. That would be a good solid indication that we can have a move lower in the markets, and pretty soon we could be retesting this level of 2800. Now, so be ready if, however, we do get a bullish move at the end of the day like a move 4, then you certainly don't want to load up on a ton of put positions. Now, this is some things we're observing. The lower trading range could be revisited today. So we're calculating again retest of 28.36, 28.26 likely today. It could also be followed by a drop to 28.11 if the volume actually accelerates going into the latter part of the day. So this is the mid-level of the tunnel. We failed to break above that dot right here, which was the 28.70. It looks like the market is going to reverse and retest the lower trading range. So that's what we're going to be focusing on today. As you watched yesterday, looking for a higher low was an entry for us on the put side. So we've calculated this 28.70 level. That's the level that we've hit 3 times and failed to break above that level. So from this point, instead of yesterday, our main observation was this yellow-orange dot of 28.7. This is the red dot that we're going to be focusing on today. As you can see, recently the market bounced out of this level just above 28.30. So call it 28.32, 28.36, right around that area. That's what we're going to be looking for the market to do at some point today. The question is, what happens when it actually does get there? Well, the answer is, as you know already, it's the volume. Okay, now that we've created 1, 2, 3, and we've created another lower high, which would be the 4th point right here. The question is when the market is going to retest this level of 28.30, 28.36. We're going to get an acceleration on volume, because if we are, then we're definitely heading to that 28.26, which has been a magic number in the lower trading range. And ultimately, if we break that, we could head substantially lower to 2,800. A couple of earnings, really not a whole lot of crazy earnings. There's just Target and things like that. Nothing really interesting. Now, Lowe's is a pretty solid trade for today. We're looking at the open buying these 105 puts on any kind of bounce. I mean, it's just, it was just a disaster. The quarter was just a total disaster for Lowe's. Home Depot actually had some decent numbers yesterday, but failed to stage a substantial rally. It actually did hit our target, so congratulations. I've talked to a couple of you guys. If you did execute the Home Depot trade right at the open, it did hit our target of 85 bucks and it bounced back promptly. So we're expecting Lowe's, however, to open lower and finish lower for the day. Our target on Lowe's would be in this range of 95, 97. So ideally, if you're coming in and you're buying puts around 102, 104 level, you want to start closing them at 97, 95. And considering the quarter, considering what is happening pre-market, considering the volume, we're actually thinking that not only is it going to drop today, but it can have a 2-day sequence of the drop. So for those of you that actually thinking, should I keep the position overnight if I buy this? So this one is pretty safe, guys, to keep overnight because the quarter is just a total disaster. I think wherever it's going to fall to today, there's probably another potential for another couple of dollar drop going into tomorrow. But this is the target for today. 95, 97 target is for today, guys. So considering Qualcomm, 70 puts on a bounce. So Qualcomm stages another gap lower, but we still think there is a substantial room for a drop further. And, you know, when we say substantial, like for a $70 stock, like a $5, $6 drop lower from here, from the 69 level, is a pretty decent drop. So what makes us being so bearish in Qualcomm, which has been the darling of Wall Street just not so long ago? Well, look at these 11 move. Look at these divergence on the RSI. Look at the triple top. Look at this gap down. And yes, check this out. After the gap down, it moves lower and it forms a what? Guys, take a closer look. It forms a black candle. And after this, this is what happens today pre-market, right? Here's your gap lower. Now, here's the tricky question of the day. For those of you that are really trying to learn this stuff and get super good at this, guys, what is another chart that you could point to that is identical to this chart? What is another chart, guys, that you can think of? Because, you know, 8 habits of, you know, highly paid traders. I mean, one of the habits that I try to communicate to everybody, you got to look at like 30, 40 charts each day. Now, I know it's easier to watch the news rather than do that. So if you are not doing, if you guys are not looking at 30, 40 charts a day, start doing that today. Don't wait another day. Don't place another trade without looking at 30, 40 charts. And good job, actually, Sarwar pointed out actually the answer to this very question in the chat yesterday. So good job, Sarwar. Very nice observations. Clearly, I know when somebody is doing their homework, looking at the charts, and the bottom line, everyone should be doing this, guys. So the answer, man, I think I just given you the answer. Damn. Okay, AVGO, guys, check this out. It's identical, right? So here's the gap, here's the drop, red candle followed by a what? A black candle. Sarwa sent that out in the chat yesterday. You can go back and look at this picture. So look at how identical these charts are, right? The multi-top formation, the divergence on the RSI, the 11 move, the gap up that's actually just got filled on the AVGO. And guys, congrats. AVGO is down. I know some of you had, you know, got 50, 100 puts on AVGO out there, some decent positions, guys. You know, it's finally given away. I know it was a tough day yesterday because it did move higher, but what do we want to do when you see a chart like this? If you see a chart like this, when it creates the gap lower followed by black candle, you want to add to the position. So good job for those of you that tough out that day yesterday, added to the positions fearlessly. You're going to have some nice trading profits. So far, last time I looked, it was down to like 171, 171, that would be nice. 271, 272 level. But again, for those of you that you guys really trying to study this, take a picture of this chart. Look, these two charts are absolutely identical. Look at this one more time, right? So here's the bullish gap. And if you will pull up this Qualcomm chart on the daily today, if you go to stock charts pull up, you will see that this positive gap, this bullish gap, was closed, or it is going to be closed once the market is actually going to open up. So, and again, what was preceding this further drop lower? It was gap down, followed by a red candle that was followed by a black candle, created another gap lower after that. So we got two identical charts, and both stocks are doing exactly the same thing this morning. Is they're gapping down pre-market. And some of the other characteristics to look at, right? We've talked about the divergence on the RSI. Look at this bearish crossover on MACD, right? Nobody would think about shorting it here because the stock is just so bullish, and they're talking about in the news how Qualcomm is going to go to $100 and so on, you know, because everybody in Wall Street loves it right here. But MACD is already telling us, well, maybe it's not so. And accumulation, right? Clearly, we got a divergence on the accumulation. The stocks try to go higher, but the accumulation is not moving higher. So same characteristics, guys. Study this, review this, right? Same character. Here's that bearish crossover in the MACD, right about the same time frame as this thing tries to move higher. Everybody's still bullish on the AVGO. We pointed that out in some prior videos over the last couple of months, saying, hey, this is the top. Boom. Now, you know, $55 lower. There we are. It looks like, you know, we could really test this 260 level today at some point. Okay, let's review the moves. So the sneaky 7, guys, and I mentioned in the video yesterday, man, I said, man, beware of that 7. So sure enough, this is how it looks on the chart. We gap up higher, market rallies higher, hits that 2870.75 level, right? And then gets there 1, 2, 3 times. But the bottom line, for those of you that are trying to make sense of the market moves and how to read them, like on the daily, all these charts I'm disclosing to you guys when I calculate this, this is a 1 day, 1 minute chart. So take a look. Basically, we're moving up higher pre-market. We open higher in relation to the prior day. We move higher, but then we make this reversal. And so this reversal is sometimes it's going to look like we're going for a move 2, because some of these, they happen, when they happen between 10 and 11, they look like an actual move 2 type reversal. But in the overall environment where the VIX is falling that day, you could actually have a 7 instead of a reversal. So a 7, you're going to have a major pullback, just like here. Then the bulls come in, they buy the dip, they move the market higher. So move higher, lower, they buy the dip, and finish higher. So we open higher, finish higher for the day. That's a move 7, guys. All right. Possible triple top, right, was created yesterday. And it's pretty much is confirmed because we are a few points lower so far pre-market. So the sell-off at the end of the day that we were waited was rather muted. However, we did get these 2 lines that I highlighted with these orange arrows. But unfortunately, the volume was not significant for us to call it a move 6. Also, the magnitude of that sell-off towards the day was just not, it was not picking up any momentum. So we sort of kind of had a delay in that action, but we'll see what happens tomorrow. We got a pretty good idea what is going to happen is either going to be a move 3 or 4. So there's probably no other moves that have a probability or a high probability. So we're really going to focus today on the move 3 or 4. As far as your 2-day sequence, guys, it's an 11-7. Okay, and here's how 11-7 looks on the move. So here's your move 11, your pyramid, gap up, your move 7 goes higher, pullback, they buy the pullback, finishes higher for the day. 11-7. 2-day sequence. 5-day sequence, 8, 1, 11, 11, 7 is how it looks on the chart. 8, 1, 11, 11, 7. And VIX review real quick, guys. It's officially yesterday was closing and trading down to 16 pretty much most of the day. And it finished at the low of the day at 14.94. The question is this a temporary bottom for the VIX? So can we actually call this a double bottom? We're going to find out throughout the trading session today. So we've noticed that a few days ago we've had these 2 back-to-back 11 moves, which indicated a retest, a further drop in the VIX, looking for a retest of 15. That's what we discussed yesterday. We are getting the retest of the 15 and going slightly below that today pre-market. So hitting the low of 14.67 pre-market today, May 22nd, around 5:30 a.m. And what it appears to be, sometimes VIX pre-market will dip like that and then it'll stage a rally from there. I think that's a high probability today. The market moves for today, again, what we're focusing on is a move 3, where we gap down, then possible bounce, continue lower, bounce, lower, bounce, lower. So go back to your 13 markets move formula course and just review the information, guys, so you can be laser focused trading today, and review the move 4 while you're at it as well. Also, guys, review the last part of the course where it talks about the sequences, right? Because I do spend some time specifically giving you a sequence, and one of the most popular sequence is once you get an 11-7, a lot of times it will resolve in a move 3 or 4. So review the part of the course where I talk about the 11-7-3 and 11-7-4 probabilities and sequences. So make it your homework for today so you can make better sense of this market. With this said, guys, key takeaways: watch out for volume reversal to the upside when the first 45 minutes of the trading. And if no upside reversal, then that's where you definitely want to add puts. Be careful in late afternoon, because a move 4 could stage a rally in the second half of the day. So keep your eyes open on this. And a good indication to add more puts towards the end of the day if the VIX is trading above 16.7, 16.5 to 17 range. So important for us to hit that level on the VIX at some point today in order for us to keep the positions overnight. Guys, with that said, hey, let's have an awesome day. Let's get some further confirmations of this reversal. With further confirmations, it's pretty safe to add to the put positions here and calculate the clear probability of a visit of the lower trading range between 2800 and 2826. And if that does take place, we could see Amazon. I had a lot of questions on Amazon trading back down to about 1800, 1820 level. So keep it nice and simple, guys. Make a bunch of money. I'll see you tomorrow.